Good morning, traders. Welcome to today's morning market call. It is a beautiful Monday of March of 2026, and we do have a lot planned out for this week, especially what has been happening over the weekend and potentially how it could affect future markets. But first, I would want us to look at the disclaimer where it does say the information herein is only meant for educational and informative purposes only. None of it should be construed as investment advice. Trading in the financial markets do carry a degree of risk, but don't worry, I'm here to help you look at the markets in the right way. As per the title does suggest, yes, we have a lot of geopolitical tensions currently ongoing. And what does this mean? But first, I would want us to look at the new promotion that HFM currently has rolled out. Last year, we did give away a brand new Mercedes, and we're also going to give away a new Mercedes this 2026. The competition began yesterday and it is going to run up to 15th of May, and it is for both new and existing clients. How does it work? You, for every trade you do take, for every lot size you do trade on gold, you do earn a point. You do get 2 extra points if the lots that were traded were profitable. Now, these points that you're going to get, you're going to allocate them, and you put them on the draws, which are going to boost your chances of winning. Whereby you're going to redeem 10 points for a single ticket if you want to be enrolled for the Benz. You're going to redeem 3 points for a single ticket if you want to if you want to get the trading station, which is going to include a laptop, two LED screens, a keyboard, a mouse, 1 year internet, and auto chartist and gold VPS access, which is some of the tools that we do offer on our HF platform. For the third prize, we are going to have 10 lucky winners who are going to be gifted iPhone 17 Pros, where you're going to redeem 1 point for a single ticket for the promotion. Once again, head over to the bonuses and promotion segment, click register now. Terms and conditions do apply. As per the title does suggest, when we are looking at what did happen over the weekend, especially with Iran as the supreme leader, Khamenei, who led the Islamic Republic since 1989, was killed. Now we have to reflect back on how it did start, how it did progress, how we reached this particular point in time. Now, Khamenei, who did come into power back in the day, and this was late 90s, where he did take over. It was exactly in 1989, who did take over after the death of Ayatollah, and he did rule with an iron fist. Now, recently, these are the images that have been shared publicly, and this is his residence. We can look at the pictures to the left hand side and the right hand side, where you can see the left hand side, this was a before image, and then this was an after image. Now, Khamenei, this is his official residence, which was targeted, and as a result, it is confirmed that Khamenei was killed in the attacks. Now, why did this happen? And this is because of the uranium enrichment program that were in talks, but they did stall quite a bit, and the United States were not taking any chances in terms of national security. Now, as of 26th of August, Iran did accumulate almost 182.3 kilograms of uranium, which was enriched up to 60%, which is an increase of 17.6 kilograms since the last IAEA report in August. Now, uranium, which is enriched at 60% purity, is just a short technical step away from weapons grade levels, which is at 90%. And as a result, the United States were in fears that, yes, indeed, Tehran was in the process of creating nuclear bombs, which could potentially be used against them. And as a result, they did take the hard decision, and once again, they did take out Khamenei. And as a result, how is this information going to affect us as traders? When you look at oil prices, it did jump after Iran did warn of ships near the Strait of Hormuz, which has been a topic of contention for quite some time. Because when you look at this small 33-kilometer gap in the ocean, it accounts for more than 20% of the world's oil and gas. Now, over the radio on the weekend, Iran did mention that no ships are supposed to pass through that region. Two vessels have been struck, and an unknown projectile was reported to have exploded in very close proximity to a third, as the UK Maritime Trade Operations Centre did mention. As a result of this information, yes, we are looking at potentially oil prices being affected, and we are going to reflect on a chart of oil in just a moment's time. What does this information mean for gold? What does it mean for silver? What does it mean for oil prices? Now, as a result of the geopolitical tensions, we usually see investors rushing off to safer havens. Now, speaking of institutions and investors, I will want to look at the commitment of traders report. Look at how institutions have been positioning themselves over the past week. Now, the CFTC, which is the Commodity Futures and Trading Commission, and this is a government website. Now, institutions are mandated to be updating their positioning at the end of every week. Usually, it's updated every Tuesday, made available to the public every Friday. Looking at the metal sector, especially looking at silver, under managed money, looking at the long positions, we did see institutions adding 1,200 positions to long, while at the same time they did offload 1,300 positions from shorts, meaning institutions are buying more silver. When you look at gold prices, on the other hand, and this is from February the 17th till February the 24th, yes, some could argue that this information is lagging, but it's really wise for us to understand how institutions have been positioning themselves. If you look at gold prices last week, if you can just reflect on that for a brief moment, the majority of last week gold prices was consolidating quite aggressively ever since Monday, Tuesday, Wednesday, Thursday. Towards the end of Friday, we did see volatility starting to pick up, but the majority of the week was consolidating. And the reason is institutions, they did offload net long and net short positions, meaning if they are taking off their long positions, if they are taking off their short positions, we anticipate gold prices to consolidate, which is what happened last week. But currently, at the moment, we do anticipate that chart to start moving aggressively. When you look at currencies, on the other hand, starting with the Canadian dollar and under asset managers and institutions, we did see institutions offloading a lot of long positions and adding to short positions on the Canadian dollar, meaning institutions were selling the Canadian dollar heavily. When you look at the Swiss franc, similar instance could be said where they added more short positions, meaning institutions did sell a lot of Swiss francs in the past week. But what did get my attention was the Australian dollar. Now, recently, data has been coming out really good for the Australian economy in terms of GDP numbers, in terms of employment, and they did increase interest rates recently. And we did see institutions looking to purchase more Australian dollars, which is what we are seeing currently at the moment, where institutions did add more than 7,000 net long positions, while they did offload 1,046. 426 net short positions, signaling that yes, they did sell more Australian dollars. Now, this week is going to be really important. Why? We are looking at the geopolitical tensions, and this is the week also that we are anticipating non-farm payrolls for the United States, which we are going to have a live analysis at the Nairobi garage, which is going to be in Kilimani from 3 p.m. till 5 p.m. This is going to be 6th of March. If you are around Kilimani region, we are going to do a live analysis of everything that's happening. You have an opportunity to join us. Ask us any questions. What does these geopolitical tensions mean? What does the non-farm payrolls mean? And we are going to get a deeper understanding of how the markets are moving currently at the moment. Which brings me to the next segment, which I would want to talk about is the charts. If you have any asset that you would want me to look into, kindly put it in the chat section. I'll be glad to look it up for you. Okay, I have Aurela wanting me to look at GU and GJ. We shall look at that. After we look at the commodities first. Now, this is gold on the 1 hour chart that I'm looking at. Now, reflecting back on the commitment of traders that we did receive last week, we did see prices consolidate quite aggressively as a result of institutions offloading net long positions, offloading net short positions. As a result, there was no imbalances between the buyers and sellers as they were more or less equal in terms of positioning. But on Friday, we did get confirmation that yes, indeed, the United States had attacked Israel, in conjunction with Israel, had attacked Iran, and Khamenei was a casualty and he was murdered. And as a result, gold usually thrives on uncertainty, where we did see prices of gold move to the upper side, and this was the closing price for Friday. Now, looking at the closing price for Friday and the opening gap for Monday, prices did gap more than 200 pips to the upper side. Now, why does this happen? Now, remember, Forex is usually 24/5, meaning it operates from Monday to Friday. But there is still activity ongoing over the weekend. Considering where prices did close on Friday and the opening price of Monday, we did see a gap to the upper side, signaling that yes, indeed, there were positioning where institutions were continuing to buy more gold, and as a result, gold prices aggressively moved to the upper side within the first 1 hour of the opening candle of today. Then we did have corrections where prices did correct itself to the downside, coming back almost close to the 5,300 mark on gold prices. And ever since, gold has been on an upward trajectory, where from the lows to the highs where we are currently at the moment, gold prices has moved more than 1,000 pips to the upper side. That's quite a significant gain on gold prices. Looking at it, where potentially could we be headed to? This is where we would want to reflect on a higher time frame, and the all-time highs that you do have on gold is around 5,600, just shy of 5,600, which is a decent range considering from where we are at the moment. This is close to 2,000 pips, more or less 3.6% of the total value of gold. Now we have just broken above 5,400. The next target I would want to pay attention to could be 5,500, which is a psychological level. Now, whenever gold is on an upwards trajectory, let me just put these parameters here. So 5,500. That could be the next target I would want to be paying attention to on gold prices, signaling that yes, indeed, currently at the moment we are seeing prices very bullish to the upper side after the massive consolidation that we have been seeing. Now, this could be affected with what Iran is going to do next. Yes, we know that currently at the moment Khamenei has been murdered. But what is Iran going to do in terms of retaliation? Are they going to close down the Strait of Hormuz totally? Are they going to bomb more places in Israel? And that could potentially now spark the next move on the prices of gold in the near future. Considering we are at 54.15, 5,500 once again could be the next target that I would want to pay attention to, considering the prices has just broken the Asian highs, and this could be a likely target in the near future. But once again, be very careful. The margin requirements for gold has actually gone up, where right now the leverage that you can trade with is 1:100, meaning for you to open a 0.01 position on gold, you need at least $53 on your account. Looking at silver prices, then we look at GBP JPY and GBP USD. Currently, at the moment, silver is breaking the highs that was formed during Asian session, which was the first candlestick of the day. If you do have a clear closure above this candlestick on the 1 hour time frame, considering it's only 18 minutes old, if we do have a closure above this region, I would anticipate prices of silver to continue moving further to the upper side. And what I would want to pay attention to is $100 an ounce on the silver metal, which in the past has been a psychological level and potentially could be the next target for prices to come back to in the near future. Once again, 100 on silver could be a reasonable target for me to look at. This is close to 4.37% of its total value. Considering gold prices is on the upper side, silver could potentially follow. I would want to look at GBP USD. Now, the Great British pound against the dollar. We did see a lot of offloading on the British pound. When you can reflect back, if I can take you back here on the commitment of traders report, where we did see a lot of offloading positions on the British pound. Here it is, where institutions did offload 10,000 positions on British pound, while at the same time they did add more than 6,000 net short positions, signaling that yes, indeed, institutions were looking at selling more of the British pound. Why? Because in the near future, we do anticipate Bank of England to lower interest rates, and as a result, the dollar is strengthening. We did see prices gap to the downside. Prices did have a retest on that particular region, a region that was once a resistance. This was on Thursday evening and Friday, now has been tested as a resistance. Prices are continuing moving further to the downside. I would want to look at potential retracements back on to fill these inefficiencies for a further continuation to the downside. If I can look at the H4 time frame, zoom out, the next potential targets could be lows that was formed. I do believe this was around Monday of 19th January. Yes, it was, where prices are currently at a key support region. If you do happen to break below this region, have a closure below that region, a retest, a region that was once support now could potentially act as a resistance for prices to continue moving further to the downside. If I can reflect on the next possible target for prices to come back to, was a while back. Let me take a horizontal line, and this was around 1.30145. And the last time prices was here was back in 2025 around November, or 5th of November 2025 was the last time prices was around this particular region. If you do happen to close below this region, I will consider looking at potential short opportunities for prices to hit that region, which is more or less 2.5% to the downside. I have seen GBP JPY also looking at the great British pound against the Japanese yen. Now, looking at how institutions did position themselves last week, once again reflecting on the commitment of traders, looking at the Japanese yen, institutions added more selling opportunities on the shorts. More than 8,000 shorts were added, while at the same time, 1,400 net long positions were offloaded, signaling that yes, indeed, institutions are selling the Japanese yen. Now, if you pair two assets that are weaker, when you pair the Great British Pound, which is potentially weaker currently at the moment, and the Japanese yen, which is also being weaker, then you get an asset that is basically consolidating, where prices are neither making clear higher highs, prices are neither making clear lower lows. What we'll want to pay attention is new information potentially from Bank of Japan. What are they going to do in the near future in terms of interest rates, where we do anticipate Takaichi economics to take effect very soon. There is going to be a potential stimulus program that is going to be released to the markets, and the Japanese yen is supposed to benefit as a result. Before we leave the Japanese yen, I would want to reflect on the Nikkei 225, which is the Japanese stock index, JPN 225. Here you are. Now, looking at the stock index of Nikkei, last week it did do really good as a result of positive earnings from Nvidia. Where, if you look at these companies that constitute the Nikkei 225, some of them are tasked with the manufacturing process. Remember, Nvidia does develop the chips, they do design the chips, but most of the manufacturing happens in Asian countries, and as a result, um, we do anticipate these markets to continue moving further to the upper side. I have a question from Mikhail. I don't have any info, but I would like to know on your seminar. Okay, beautiful. So we shall be at the Kilimani. We shall be at the Nairobi garage in Kilimani on 6th. And then we do have other events that I'm going to talk about in just a few moments' time. I do have a question from Kevin. Why is the Great British Pound bearish? Once again, the GBP is bearish currently at the moment because institutions are selling the British Pound. If you look at ever since February the 17th till February the 24th, institutions did sell. They did offload 10,000 positions on longs. Considering the net long positions are 34,000, they did take off close to 30% of the net long. Now, think of it this way: whatever institutions buy, they have to sell back into the markets for them to get the profits. Now, if they were selling initially, if they do start closing their if they were buying, sorry, if institutions were buying initially, if they start selling into the markets, that's when you anticipate the short-term retracements, and as a result, more long positions were offloaded, while at the same time, 6,000 positions were added to shorts, meaning institutions closed their long positions, while at the same time, they did add to short positions, meaning they were selling most of the British pound last week, and that's why the British pound is currently weaker. And the reason is because the data has been coming out really worrying for the British economy. When you look at GDP numbers, did come out negative. When you look at employment numbers, also it did come out worrying last week, and that is the reason why I do believe the Japanese yen. Now, when you're looking at the dollar against the JPY, currently, and I've seen this comment here, when you're looking at the dollar, currently the dollar is strengthening. When you look at the dollar index on the 4-hour time frame, let's wait for the chart to load. But if I look at it on the 1-hour time frame, you can see the DXY is currently bullish, meaning the dollar is strengthening. Yes, against metals, the dollar is weakening, but against other currencies, the dollar is winning. And as a result, when you look at USD JPY is also moving further to the upper side. We did break above this region of resistance that we were looking at last week. Currently, at the moment, and I would want to identify these highs. We have a clear closure above that region. If we do have a retest around this particular region, I will consider looking at potentially more opportunities for prices to move further to the upper side, potentially taking out the highs around 157.5 mark in the near future. If you have any assets, so yeah, gold is bullish and the DXY is bullish also. When you look at gold, gold is considered more of a safe haven. Whenever there's uncertainty in the market, gold usually rallies to the upper side. But don't forget also, the dollar is seen as a reserve, where if the dollar index is stronger, it means most of the currencies are going to buy if it's going to be paired with the dollar. Let's say, for example, USD JPY, it is buying. But if it is paired against the dollar, that's when you anticipate now the charts to move further to the downside. Now, that's a very good pointer from Ian. USD JPY, I do believe we have tackled UJ. Thank you, David. Beautiful, beautiful. If you have any assets, kindly put it in the chat section. I'll be glad to look it up for you. Now, bringing you back to this is the perfect time for you to join our. Once again, we do have our live analysis event at the Nairobi garage. This is going to be Kilimani. We also do have events that we are hosting. Today we shall be in Mombasa. If you're around Mombasa today, we are the City Blue Creekside Hotel and Suites from 11. Less than 30 minutes from now, we shall be starting our event. Then on 4th of March, we shall be at the Hotel Titanic. You have an opportunity to join us. Come ask us these questions. What do you think the markets are headed to? Then we shall be off to Malindi on 6th of March, and we are going to conclude our pit stop tour at that particular region. If you want to be an affiliate, if you want to join the HFM affiliate program, you have an opportunity to meet us, the business development, Kelvin Rosota at the Mount Royal Villa Hotel from 27th till 1st of March. And this one, actually, we have just concluded it. But looking at also, we are going to be in Uganda. If you want to become a partner with us, meet us in Masaka at the Maple Leaf Hotel from 5th till 7th of March. Have an opportunity to meet James Wesonga. Now, we do have, once again, our pip stop tours. We do have a lot planned out for you as traders in the near future. That's going to be it for me. Kericho, we just concluded our pip stop tours for Kericho recently, but we shall be coming your way very soon in the near future. Now, these opportunities that we do have currently at the moment, volatility is at its peak. This is why HFM is offering you an opportunity to open the Shield 500 account, whereby if you do happen to open a trading account at a wallet within the first 10 days of registering, you have an opportunity to register for the Shield 500 account. Whatever money you do deposit with us within the first 10 days, between $10 and $500, if you do incur any losses within the first 25 days of trading, we shall back you up to $500 once again. Head over to the HFM bonuses and promotion segment. Terms and conditions do apply, but I would want to talk about the Benz once again, where you have an opportunity to win a Benzo this 2026 For every lot that you do trade, you're going to get 1 point for it. You do get an extra 2 points if these lots are profitable, and then the points that you have earned, you can distribute them across different draws and boost your chances of winning. Where for the Benz, you are going to redeem 10 points for a single ticket. For the trading station, you are going to redeem 3 points for a single ticket. And for the iPhone 17 Pro, you are going to redeem 1 point for a single ticket. Head over to the HFM bonuses and promotion segment. Start trading your journey right now. Terms and conditions do apply. And that's going to be it for me. My name is Ian Joseph, market analyst at HFM. I do have user Sif Mombasa. Beautiful. We shall see you at the Creekside Hotel. So, USDJPY, I have an inquiry for USDJPY. Once again, we are going to be in Uganda at the Maple Leaf Hotel from 5th till 7th of March. If you have an opportunity to become a HFM partner with us, remember sharing is earning with HFM. Now, I do have DK with a question from USDJPY. Currently, at the moment, what you'll want to pay attention to is new information. This is whereby you will want to look at what could potentially happen in the near future. Keep a keen eye. We have all of this information. Keep a keen eye on the news segment on the HFM platform. Anything that is going to come up, we are going to send it to you via the HF application, where on the market insights, you do have an opportunity to look at what is potentially happening in the near future. What is the platform you used to look at the GBP news? This was the commitment of traders report. This was it. It's called, if you go to CFTC, cftc.gov, then under market data and economic analysis, you do have the commitment of traders report here for institutional buys or sells. Yeah, beautiful. So this is where you look at how institutions are positioning themselves in the markets. That's going to be it for me. Once again, stay safe. Remember, at this particular moment in time, risk management is going to be crucial. Making money comes secondary. May the pips be with you. I shall see you when you do see me next.